All right, guys. We're here another day, another dollar. All right. So it's your boy John. I appreciate you guys for tuning in again. So I wanted to give you guys the setup before I go into candles and support and resistance. I just want you guys to have a setup in terms of how I set up my chart. So I'll try to keep this short and sweet. Chart type, obviously candles. I do minute time frame at a 5 second trading interval. So I'll include this below, but in order to trade at 5 seconds, your asset has to be an OTC asset. So you'll see it when you click on the assets. So just make sure it shows that. Otherwise, it'll default to a minute for you. Okay. Indicators. So the indicators that you see that I use are moving average, MACD, and then I use the oscillator. All right. The inputs are there for you, and so are the styles. So you can go through and put those through. All right. And you just match them up. So like I said, I'll keep this short and sweet. I just want you guys to have this. All right. Okay. In terms of the strategy, so first and foremost, I mean, you can trade any asset. Typically, in terms of where I find success is with cryptocurrencies and the currencies. Okay. Now I have here, I mean, anything yielding over a 90% return is what you want. I focus solely on 92% just to get the most. So for what number you're entering in that entry, yeah, when you're setting that trade, essentially you're going to get whatever percentage back. So that doesn't make sense if we're talking $100, risk $100 for a 44% return chance just to get $44. It's not worth the risk. All right. So make sure you keep an eye on that number because it does fluctuate throughout the day. Again, if it goes I mean, it can go 91 and 90. I mean, it's not a big deal. But I definitely don't trade under 90 unless I just really missed it or something. Okay. So always keep an eye out on it. In terms of those indicators that I showed you to set up for. So ideally, everybody wants to go 4 for 4, right? So you want all four things to line up before, and then you enter knowing that, hey, all four of these line up, and I know this is good. Now, realistically, that doesn't always happen. 3 out of 4 is acceptable. All right, so I will tell you that. So I'll explain shortly when we get a chance to look at the chart. But just please know that. Now, another key thing, based on me trading on a 5 second interval, that means that when I'm entering a trade at that price point, I- I'm not looking for long-term success, all right, in that direction. I'm just saying that if I'm buying, I know that the price point is going to go over that where I'm coming in, where I enter for 5 seconds, not 6 seconds, not 7 seconds, not 8 seconds. Okay. So with that said, sometimes I do trade against the trend, which I showed an example below, from one of the groups I was working with today. Okay. But essentially, yeah, timing is everything, is what I'm getting at. So you want your display to be most people's display is set automatically on 100%. I notice with 100%, I can't see the very bottom tool, so my oscillator's not showing fully. So I changed mine to 80%. So 80%, you can really see everything on the screen if you're using a desktop, at least, or laptop. I'm sorry, including the other like assets that'll be at the top. So you can see everything you need to see all in one quick glance, which is very important because any hesitation of scrolling down and scrolling back up, you probably lost the opportunity. Like it is literally, you have to be very quick and to click that button. Okay. So let's keep going. I'll show you what it looks like. And I mean, you guys seen my chart already, so you should know. All right, so first indicator moving average. So essentially, when I'm looking at this, I'm going from section 1 to 2 to 3. Okay, and I do that because 1 and 2 are my top three areas that I'm looking for, or top three confirmations that I'm looking for. The fourth one is just like the icing on the cake. So I don't need icing on my cake all the time. You know what I'm saying? If I had a lot of sweets, I don't even like cake, so I need to think of a different example. But anyway, that's the icing on the cake. It doesn't need to be on there. All right, but if it is, then that's good. If it doesn't, just know, you just need to know why, right? And a lot of that is going to come from experience with live trading, but typically when I say that, I'm talking more so like just from this example I can actually give you because I'm looking at it right here. So if you see this is straight sell, right? This is going downward, and then you have this red over green that's also indicating a sell. You see where at the bottom here it's consolidating, all right? So you have opportunity to sell, right? So you got one and you got one, two. Well, I'll go over process with you shortly, but you have one and two areas that are looking good, and it's just this third one that's kind of ugly, right? So if you made this choice, you're fine still. It's just this is ugly, all right? So I'll go over an example here with you shortly, but I just wanted you to see what I was referring to. And the same thing here. Obviously, this is a clear buy. We got the crossover here, all right? But this at the top is ugly. So if I chose to buy in in this area, it's risky. It's a little bit more risky, but and I'll explain why shortly, but it can be a good choice. All right. So let's get down to what I'm actually looking for when I do this. So I'm gonna go section by section, and then the example below, I'll go through that with you too. All right. So first thing I'm looking at are, like I said, that first section with the moving average and candles. All right. So you want to trade in the direction of the moving average line. So the moving average line is this thick yellow line, which is why I told you to change that number to 3 so you can see it nice and big. All right. The smaller the number, the thinner this line is going to be. It's going to be hard to see. So I like to use yellow because it's very easy to see yellow. All right, so that's the first thing I'm looking for. So if I'm just looking at a looking at a certain one here, so right here, so we're clearly down. We got candles going down. I feel good about this, right? So this is telling me sell, all right? So that's the first thing I look for is that yellow strong line going downward, yellow strong line going up, strong line going down, okay? Not necessarily at the bottom. You're trying to catch it in the beginning. Just quick FYI. So the second thing that I look for are two or more candles to be formed either above that yellow if I'm looking for a buy, or if it's below, I want it to be, or a sale, I'm sorry, I want it to be below the yellow. Okay. So when I say two formed candles, I'm not referring to under or above. I'm not talking. So as you can see, there are zero candles. Well, I guess there's a couple here that are not touching this yellow line, but the majority of them are going to touch the line. So you're not looking for the line not to be touched. You're just looking for the majority of the candle to be above the area that you're looking to go. Okay. So that's all that you're looking for. Okay. Now also what you're considering is in terms of where that the candle that you're first looking at is technically the first candle that's touching the yellow. Okay, so as you can see here, and this is a good example why, right? So this line, so this is a tweezer. I'll just tell you right now. This is a tweezer. You got a red, you got a green. The green is showing a reversal here. And so would I click buy at this point? No, I wouldn't. It'd be a little risky at this point, right? So I'm gonna let that because this candle is not above the yellow line, right? So I can't consider this. So this is one candle here. So technically, I want to see a second candle forming in that same direction. As you can see, it did not. So because it did not, I would not have placed a trade of a buy to try to do a short grab it before because I don't know what it was doing before. But assuming that this was going to just retrace and go back downward, I wouldn't have. If I would have tried to click buy at this point, I would have lost. As you can see, it just reversed there. Okay, so you want to make sure that those candles are forming above the yellow. So right here or below, like I said. So right here we got a red. You can't see it, but there's a wick touching here. That's not really a clean candle. But then the second one, if you want to consider this the first one, would then also show another candle going underneath. So this would have been a sale. Now, the other thing that I feel good about, and I'm going on the different lessons, we have a floor here. So I know I have a short opportunity to grab something. Okay. Because again, I'm not saying that it's going to go with the difference between this and Forex, you're not looking for it to exit at a certain price point before you take your money. You're just saying that, hey, wherever this horizontal line is, it's going if I enter here, it's going to be either above that in 5 seconds or below that in 5 seconds. Okay. So this would have been another quick grab that you could have took advantage of because you have a candle that's majority forming below the yellow, and then the second one is formed. Okay, or forming. So this is riskier. Because again, I have it on. Did I go over it yet? I don't know if I went over that. Yeah, I did. So you can, yeah, single candle. Okay. So yeah, so single candles can be risky. You can look ideally for two. If you did two, then you would have probably held out and saw that this one then reversed. So then you wouldn't have jumped into this opportunity. So if you're looking for two foreign ones, if that's what you really want to do, that is fine. Me personally, I try to take it if I see one, if it makes sense to, because I see there's still wiggle room for it to go down before it bounces back up. All right. I can keep going with the same example. You can't really see up here, so I'll leave this one alone. But as you can see here, this retraces down a little. So now we got another one where the candle's forming over the yellow, and then the second one is booming over. Or if you consider this the first one, then you see this one you see this one, you see it's continuing up. So you have opportunities. Now, I'm not going over specific times when you would jump in because I can't show you that without taking you through a live trade. I'm just trying to get you to see the concept. Okay. So again, timing is everything. I'll go into when to enter exactly on a later video. I just want you to see what I am talking about initially. So keep going with the same thing. Candle forming under the yellow. This is one. This is to be your second one. And as you can see, you keep the thing going. Okay. So very easy concept to follow. That is my first and second, okay, indicators or confirmations, I should say, that I need. All right. So one and two, you got the 1-2 punch. Now the third one, I'm looking again for crossover. So as you can see, crossover is all I've been talking about here. So crossover is when the buy turns to sell, sell turns to buy. I don't care if it's long term or short term because I'm doing 5 seconds. All right. So the MACD, I'm sorry, let me scroll down. As you can see, crossover opportunity. The crossover that is showing should be consistent with what you see with the candles. All right. So if your crossover is showing a buy, those candles that are above that should be looking like a buy. All right. And what you're looking for is essentially those bars to cross. So red over blue or green over blue. I don't know what color I'm using. Green over red. And then you should see consistent bars underneath that. All right. And if they're getting bigger, that's better. Now, if they're starting to mellow out and be tiny like this is more risky. This is a sign of consolidation. So you're looking for these big changes. You see how the red ups are now turning red downs. And then you got the green ups turning into red ups, turning into red downs. So you see that? Green downs, turning into green, smaller downs. Now it's consolidated, so it's too late, right? So you're looking for those opportunities, essentially this area here where you have red ups. You got a crossover where the red goes over the green, letting you know that's the crossover, and you have this consistent flow here. That's pretty. That's letting you know that's the number three that you need right there. Okay. And it works the same way the other way around. You see the greens, they're big, they're down, and then they're going up. Okay. So you want to jump on these early. You do not want to jump into any party late. You guys, if you follow any other videos, you know how I feel about coming late to the party. I mean, it's fine when it's fun, but you be too late, get a little wild on you. So let's yeah, so that's how MACD works. Okay, you're just looking for those crossover opportunities, and that's exactly what you're looking for. And that's why it's very important to be able to see this right away because you see it right away, then you click that button and you got it. All right. Now the oscillator tool is the fourth. Like I said, this is the icing on the cake. Okay. So three, two, three. I'm sorry, 1, 2, 3 should be also supporting four. All right. If four is showing you something different at that point, make sure just know that it's more risky. It's not necessarily well, depending on what you're seeing, I guess. So let me be clear with that. The oscillator is telling you of a reversal. So you guys are reading this, so I'm gonna scroll up. You can go back and stop the video or something if you need to. Um, so the oscillator tool is preparing you for a reversal. So when it's going up towards the 80, it's saying, hey, at this buy level, it's going to likely reverse, all right? So as you can see, it touches, it reverses, it doesn't touch here, but it goes to it, it reverses, touches, it reverses, touches, and then now it's consolidating where then it reverses. And then it's the same way for the 20. So it touches down here, and then it reverses, touches down here, then it reverses. So essentially, when I'm jumping into these, so if I'm still basing it on this one example, we got downward movement here. So you got downward movement here. You got this little pretty thing going, which is your 3. So you got 1, 2, you got your 3, and then the 4 is where it's pointing downward. This is all lining up for a good sell, right? Now, if I was down here jumping in where it's starting to consolidate, it's still showing a sell, as you can see. But as you can see, it's starting to get a little fuzzy, right? So you see these little areas where it's getting a little stagnant. It's getting a little stagnant before it keeps dropping. So stagnant, remember, just because it's red doesn't mean that it didn't go up. So then this is where it's important to know, hey, where did I enter? Because this is what I was telling you. You hesitate too long and it can, it can go up and down and it can go back down where it needs to be, but it may do that at instead of it may do that for a couple of seconds and then it'll reverse on you, take you out, then it'll continue down, right? So this is the risky part when I was talking about that. When you start to see that line curving, those lines curve, that means that it's going to be some sort of reversal. Yeah, can you take advantage of a quick buy? Yeah, possibly, but it just depends on what's going on back here, which you can't see right now. So, would I? No, I would leave it alone for right now because I don't see anything like too nice. Because yeah, this is a large red, and then I mean I know this is a small tweezer situation, but I don't like that with big red candles, right? So I'm not looking for a big reversal when I see that. So when I'm looking for a reversal, I'm looking at this. I'm looking at small wick and then a larger candle. That lets me know of a reversal and vice versa. So small wick candle and large candle following. Okay, so small wick and candle and large candle following. So that's not the lesson today. I know I get a little chatty. So hopefully you guys see that and understand that. So again, you just want to make sure it's pointing downward in the overall direction. If it starts to curve out, that's when it gets a little risky, and that's up to you if you decide to go in there or not. But as you can see, there's always time to find another trade. Again, each of these little candles represent a minute. All right. So you have all day. So please don't force anything if you don't need to. If you miss it, you just miss it. Okay. It happens. So you have my setup, you have my trading style. I'm giving an example of so yeah, today, because again I was done trading today. Yeah, you got your open and closed. And as you can see, like I said, when you start to scale up and stuff, you can and you're doing a little bit better, then you can put in more trades, right? So I mean, but get yourself to a point where you're comfortable doing that, because like I said, it's all about risk management, and you have to go based on how you're generally feeling. So anyway, just an example of what I was talking about. I wanted to show you of an opportunity to grab in a situation where you're looking for retracement, right? So this is going good bear energy, right? But with my method, since I do 5 second intervals, I don't care personally about trading against the trend if it makes sense. Now, the reason why this made sense is because I have a couple of things here, right, that I can see. So, and again, this is not my so I didn't trade this one. I'm sorry. So let me rephrase. I didn't trade this one. This is what I would have traded if I wasn't done already. But if I wasn't done and I wanted to trade, this is exactly where I want to be because I'm catching an opportunity. So what you see here, and this is how fast you have to react to this. Otherwise, you can miss it. All right. So when I'm looking at this, I'm looking at a lot of downward energy. Anytime you see a lot of movement in one direction, just know that it's going to retrace upward or get stagnant somewhere. So these are good buy opportunities in the sale. What lets me know that is you have a bunch of small candles teetering downward, and then you have this big candle that then reverses to a green, right? So that's one quick thing I'm looking at. The second thing is the fact that I have several minutes where this thing teeters around this area. So I know at this point there's something here. This is what you call a psychological floor. It hit this, it bounced up, and then it couldn't get back down there. So crazy buy opportunity. All right. So what do I look for? First thing I look for is this candle upward. You see how it's pointing upward. Ideally, I have a second candle here that is showing, and I'm sorry, I don't know why the arrow's pointing over there, but anyway, the second candle that I'm looking at is showing sorry, the second thing I'm looking at are these two candles. So one forming over that yellow, and then I have a second one that's actually one formed over, and then the second one is forming. Okay. So in these situations, I don't necessarily have time to wait for a second candle to form. All right. So what am I looking at real quick? So one, two, and then you remember this situation. We got the large buys that are reversing to a larger buy. And then you have the open mouth there. Quick three, quick four, upward. That blue is pointing upward. So those four things you have to catch quickly. Okay. There are five things technically. So floor, up, one, two, three, and then four. Okay. You have to catch all of those very fast to put in the buy at that point to take advantage. Now, if you note this, this is at 7227, and this is 2 minutes later because I was doing snapshots. I'm sorry. So 2 minutes later, so each candle, remember, is yeah, each candle is a minute. So this was your entry at what did I say, 227, which would have been slightly over this wick, if you can see that. And you see how far up it went. All right. So your candle would have closed in the second one before it started to possibly go down. I don't recall what it did at that point, but I was making this for you guys. But as you can see, you got the reversal here. Candles get those bars getting bigger. You got the open mouth here, aggressive. Then you got this, and this pointed up aggressively to the 80. So do I jump in again? Probably not, because why? We're reaching the 80, and it's a chance that it's probably going to reverse on me, right? Why would it reverse? Because it's in a sell trend. All right, it's in a sell trend. And if you were to be able to visualize some sort of line, as you can see here from the top to here. It's touching, and it's probably would touch somewhere in this area and reverse all the way down, which is what it looks like it's going to do. Yellow line is not going up aggressively; it's starting to curve out. So this would be one that you stay out of, okay? Or just keep an eye on maybe if you want, but I wouldn't. Yeah, I would keep an eye on it. I'm sorry. Keep an eye on it to see if it goes back down to see if you have a sell opportunity now. All right. So that is how this works, guys. At the end of the day, I wanted to show you one that was kind of difficult because I think everybody shows like the easy ones where it's going up, down, up, and it just depends on the method that people use. I want to show you how that you can trade against the trend and make money. Right. So, few quick things to consider. All right. Again, trading is risky. So wherever you're trading, make sure that you're comfortable with the money, man. Because again, win or loss, like you have to live with that decision. I'm just teaching you what I use. I'm taking you through my experience, but I'm not guaranteeing everybody to be profitable because again, a lot of this, I mean, this is years of me trading, so it took time for me to get comfortable to know what's going on and to develop some sort of tolerance. So it could take you that much time to not shouldn't say it shouldn't take years, but it'll take you some time too. This isn't something that you can jump in and do for a month and be just like super successful. So it's a lot of studying, it's um a lot of trial and error, man. So a lot of trial and error and really getting the right mentality. Okay. On my end, I look for crossover opportunities and exploit them for short term periods of gains. Okay. Also, I ideally only try to trade 5 times. Okay, so if I get five, where I'm at now, I would stop. Um, but if I do continue on, I'm always going to secure the profit. So if anything after that, it's more so for play, where I'm just like putting in small figures and whatever. Okay, so the 5 opportunities. Okay, don't be somebody that sets yourself up to be doing 20 trades in a day. That's stressful, unless you're like practicing or something. Even in demo, because it's just not realistic. It's not something that you're going to do. So if you're doing demo, like set and you're practicing like process, just limit yourself. Try to be realistic. Like try to be so realistic, like it is your real money. Because when you do get to your real money, like the mindset changes. So at least if you're if you're thinking that way in the beginning and it's upsetting you that you're losing something or whatever, even if you're in the very beginning, like it's going to make you better and make you more successful for this thing. So again, I look for the 5 best opportunities in the 24-hour period. You don't have to do all this one sit down. You can space it out. You can find the time of the days that work best for you. So that's the purpose of the demo. So you can practice and see like, hey, is daytime easier for me? Is nighttime easier for me? Is midday? Is before like work at 4 a.m. Is that better for me? Okay, regardless, you have to figure it out when you figure it out. Even on the weekends, like Saturdays good trading days for me. Sundays, like from what I noticed, Saturdays are a little bit slower. Well, I don't want to say they're slower, but well, I only did a few Saturdays, so I don't want to give too much judgment on Saturdays, but to me, it's been easier to find opportunities on, every day but Saturday. This last Saturday, I did like a few trades, and then I started doing like evening out where I'm like, winning, losing, losing, winning, losing, winning, winning, losing. So I just stopped. I'm like, look, all right, I see where this is going today. So, but that could have also been because I had stuff to do and I'm like rushing it. So you have to know, yeah, this is something that you can't like try to just say, hey, I'm gonna sit here, I'm gonna knock this out, and I'm gonna be done. Like you really want to find those best opportunities that work for you. Okay, so I mean, choose your path, do what you do, have fun with it, and learn, man. But in terms of warming up, make sure you're using amounts that make sense. Please don't be the person that comes into this thing and wants to trade $10 and $10 and $10 and $10 and $10 because you won't make any money that way. And then when you lose, you're losing essentially what you just earned. So you have to compound with those profits because if you don't, you're going to really be not doing anything. All right, just being honest. Okay, so this is an example. If somebody's like uneasy about really putting up a lot of money, because again, whatever you start your account with, I mean, you can trade it. All right, if you put $300 in there, you can put in a $300 trade and then either win it or lose it all. Right. So there's no limit on your trade. So, but risk management is important. And I would just say, whenever you do start, like actually even practicing, just practice with amounts that you can see yourself doing in real life. Okay. And gradually build up because, doing this, like this setup that I have here, $100 a day, if you're doing it 7 days a week or 6 days a week, however, I mean, just, once you get to a certain threshold, and especially if you're good with this, once you get to a certain threshold, you can scale up. It's very easy to scale up doing this, okay? Because from from $100 to $200. This is the change up here. 25, starting with 25, going to 35. All right. So once you get 25, you get $23. Your next one is 35. So you're risking 35, or I'm sorry, you're taking $12, a $12 loss essentially to put in the entrance or the entry of $35. But if you get it, now you're at $55. So now that 55, you're trading 50 is what I would do. And now you're at 101, right? So I don't like to scale up too small because especially since I trust my process and it's been working out for me. Because I know like if I do too small amounts, then I'm never going to get to my number, or if I do, I can't promise I'll get there like frequently. All right, so I'm pretty consistent with what I've been doing up to this point. I've been doing like 4 to 5 trades and just kind of like stopping, like at level 4 or 5, right? But like I said, to each his own. Like I said, this is the good thing about this. There's no competition. What you do is what you do. You keep it to yourself, and just do well with it, man. But I'll have some more videos launching soon. So until then, appreciate you guys. Thank you.